Good morning, everyone. It is 6 a.m., half an hour before the market's going to open on Wednesday, May 8th. Yesterday, we were looking for the market to be very muted. We didn't feel that we would get very far, and that if we did move, if then we would consolidate around this 518 first and then move up. If we could go significantly above the 518, then we might get a squeeze into the 520 to 522 region. And then if we broke to the downside, we didn't feel that we could get beyond 514. Well, it was a lot more muted than we believed it would be. And so we just came up here and it hung out around the 518 level for most of the day. And we can see that when we did make an attempt to move higher, the bears didn't have any of it, and they just brought the market back down into range, and we just stayed here the entire day. So the lack of motion, the lack of price action, is reducing volatility. That's a very small bar, so it'll drag down the average ATR. And we also have low volume. We've had low volume for a few days now. So this market has been going up on low volume. We went up quite a bit, and it looks like we petered out right here at the 518-ish level. And then pre-market, we were down a little bit. Let's take a look at those futures and see how much we're down. And it's kind of significant. We've got 40 basis points on the S&P 500. We've got 60 basis points on the NASDAQ and down about 20 basis points. So we have a fairly large spread between the NASDAQ and the Dow, which is what we've been having for the last few days. But yesterday they diverged. One was up, one was down. And today we've got them all in the same direction. At 60-ish basis points, 40-ish basis points, a little bit beyond random this morning to the downside. So what it really looks like is that we're running out of momentum, moving up. We bounced really hard and surged through that MA50, but we're petering out at that 518 resistance that we've been talking about. So if we pull back a little, we could come down and maybe test that MA50, or we could just chop around here for a little bit. What we really need in order to get a direction in the market is number one, volume. And then that volume is going to come if we get something of a catalyst. Yesterday, we didn't have a catalyst. We looked at the economic calendar. There wasn't anything really there. We looked at the stocks that were announcing earnings, and there wasn't much there. And there just wasn't really anything on the horizon that made us feel that we could have a strong catalyst. So it's not too surprising that we didn't move much yesterday. So same thing today. Either we get a catalyst or we don't. So, or we're going to take a look and see if we can find that catalyst. And if we can't find a catalyst, then it's going to trade technically, and we would still need volume to come in order for us to have a strong bias in either direction. So let's take a look at our economic calendar, see if we can find anything that might move prices today. And not really. This is looking like a very quiet week. We've got EIA report, so we might get a little bit of movement in the energies, but that's not really going to influence the entire market. Tomorrow we've got jobless claims. That could help a little bit. And then consumer sentiment on Friday. So this is a really light news week. You know, we're winding down on earnings. All the major companies, large market cap companies, influential companies, those for the most part have already reported. So let's see, today Uber might be interesting, Fox might be interesting. That's about it. And then today after the market, we've got Airbnb. That'll be hospitality, travel, consumer discretionary. That will have and could have an impact. Yeah, nothing else. There's not a whole lot happening. Tomorrow before market, Roblox is well followed, but it's not a hugely influential on any market. So no real catalyst. If there's no real catalyst, then I've got to look at the news. I've got to look at the sectors that have been leading or lagging and see if there's potential for movement over there. So let's see. I thought I saw some news flashes this morning about chips. Huawei, let's see. Yeah, not really seeing too much. Yeah, not really seeing all that much. Okay, so some stuff about the US limiting the amount of chips that they're allowing to be shipped to China, in particular Huawei. Huawei is one of their, it's sort of like their Apple of China. So if we limit chip sales to Huawei, that's going to mostly affect companies like Nvidia, Intel, American-based companies that sell chips widely around the world. So that could have a little bit of a damper on SMH, and SMH has been leading all last year, all this year, even in this wave upwards, we saw that SMH has been leading. So let's take a quick look at SMH and see how that's looking this morning. And down, but not, I mean, that's 1% in the pre-market. Yeah, $2, a little over $2.30 on a $2.20 ETF. So that, yeah, it's like 1%. It's not going to be huge. Doesn't have a huge effect on SMH. So, it might make it difficult for tech to move upwards, but I wouldn't say it's going to send tech in like spiraling downwards. So we're probably looking at another muted session. And one of the possibilities we talked about yesterday was that we hit that 518 level and we just chop sideways a little bit and we consolidate. And that's looking like a little bit more like what's going to start happening because we just don't have any catalysts. We don't have any really good reason for people to get emotional about this market. We have our earnings, they're not that exciting, or the ones that are coming out in the future or in the near future are not that exciting. We've got no economic data coming out this week. It's been a relatively quiet news week. Anything that's been happening in Israel Hamas, you notice that it just hasn't been moving the market lately. And that's not unexpected because when the conflict broke out, we said, well, the Ukraine-Russia incident, or not incident, it's a war that's been dragging on for over 2 years now, but it had not even 1 day's worth of effect on the market. And this Israel-Hamas thing, we're getting news, but it's just not moving the market anymore. So we can see that in terms of like XLE. XLE is no longer moving, just moving very technically. It's not moving based on anything that is happening geopolitically. We look at gold. Gold had its pullback and then chopping sideways. So these are all more reacting to the dollar, DXY. When we look at the dollar, it's popping up. It's hitting this resistance right here at EMA 8, EMA 20, and this line. More importantly, the line, we don't care too much about averages when it comes to US dollar. So it's mostly this line where it broke. And so if it broke, it bounced, and now it's hitting this line right here. If it continues upwards and breaks through it, then we have a strong dollar. That's bad news for energies, commodities, gold, anything that's priced in the US dollar on international markets. And then if we bounce off of it and come back down, then that's good news for all of those things. So we just have to wait for the US dollar to play itself out and see which direction it's going to go. And normally, in normal technical analysis, we would say down is the more likely. We came up, we broke support, we came up and tested the previous support, which is now resistance. And so we have a harder job going upwards than we do moving downwards. So that is kind of good news, but we just have to wait for it to happen in order for it to have an effect on the S&P 500. Other thing that's happening is this VIX. This VIX is kind of low. If we just start moving up and down in this 13 to 15 region and just chop sideways, well, what does that put us? That puts us back into kind of February, March, April. And February, March, April was this, we had room to move upwards and be bullish. So in that lower volatility environment, that does open the door for us to move higher. We just got to get over that resistance first. So let's take a quick look at CPC. Come like flat, perfectly in the middle and perfectly neutral and not telling us anything. There's just not much in this market that is feeling like it could move. It's like it's tired. It's like we went on this huge run upwards and then we came back a little bit and then we tried to continue on our run, but we're tired and we just need to rest for a little bit. So we're getting these smaller bars, high to low bars in the last 3 days, and lowering that VIX we saw earlier came down. Our ATR over here, you can see this curving downward in that ATR. So it just feels like it's listless. It's just going to kind of maybe bounce around a little bit, but not too far for at least a few days, or at least this week, because there's really nothing for us to get going. So we're not going to expect too much of this market. Of course, if we break key levels, then that could wake up the market. But otherwise, if no volume comes in, then we're just going to chop around. Right? So yes, we're back down today. So we didn't break that key level. And so there's not a lot of excitement. There would have been a lot of excitement if we broke the key level over here. And we're just kind of petering out. So today, our expectation is going to be similar to yesterday. Yeah, we could go up. If we go up, we're probably going to hit that exact same resistance, 518. And depending on volume and momentum, when we hit that 518, it'll determine on the likelihood of us moving beyond it. But as of right now, it doesn't look like it's too possible, given how much it struggled all day yesterday just to pull back in the overnight sessions. So probably not too much to the upside. We come down this 515 or 514.75 region. This is not a strong level anyways. So yes, we could react to it, but it wouldn't be too surprising if we broke below it. And then if we came and touched the 512, well, that would be normal motion. So today, our range of prices that we would expect to be reasonably normal would be 518 to 512. If we break below that, then we could start getting a run. And if we notice what is our ATR over here, it's 5.98, it's 6. And we have a range perfectly of 6. So if we bounce between these two, then nothing to be excited about. It's just normal market action, random, mostly random. And even though we're a little bit directional in our futures, we have been coming down in volatility, but we are in a slightly higher than normal volatility environment. And so this is even in the S&P 500 at just below 40 basis points. We're just going to consider that random region. Normally we give it about 33 or 35 basis points in order to say it's beyond random. And well, we're at 38 basis points in a heightened ATR or a heightened volatility environment. So that 38 is random. The only one that's not really random is the Dow right here at about 60 basis points. So was that the Dow or NASDAQ? What was I pointing at? NASDAQ. So completely misspoke there. So we're going to watch NASDAQ tech stocks, semiconductors in particular, to really give us a clue as to whether or not this market is going to move much today. But for the most part, from everything that we just looked at, we're not going to expect too much movement or this to be a very exciting day. That's going to make it very difficult to day trade. Yesterday was an extremely difficult day trading day because we just didn't move anywhere. So you have to have really, really, really high conviction setups in your day trading environment. Otherwise, you're paying those commissions and the prices on the underlyings are just not moving. So even if you leverage it, it just doesn't give you very much return. And if it's just a random walk, then you're looking at a 50% probability. You don't have much of an edge. So on days like yesterday, it's very difficult to meaningfully day trade. And today is so far looking like it might be another one of those days. So mostly muted, mostly quiet day. Not going to expect too much excitement, but we will watch that 518 and that 512 level. And if we start to break out, well, what we need is conviction and momentum. Yesterday, when we started to move up, we just had these baby bars drifting upwards. And that can be really powerful if it can be sustained and it can be done with sufficient volume. So it started out great right here with this large volume bar, right, immediately followed by a comparatively larger upward price bar. It started out great, but we just didn't get the volume follow through and it just petered out. And then we got these huge red bars over here. So if we do break one of those levels today, we need it to happen with a lot more momentum and a lot more volume. Otherwise, it will just expect similar movement today. So at least so far, looking like it might be a relatively quiet day. It might be one of the days that you just sit and watch, go have a coffee, go out for a walk, do something else with your time, because it could become a very boring session, just like yesterday. We've got a good idea of what to expect for the day, about 10 minutes away from the market open. So we'll just leave it there, and I will see you in the post-market session.